Hello. If you take a bird's eye view of the world at present, the high rate of inflation is, simply put, the result of too much demand and too little supply. Economies worldwide have been thrown off balance, but the way to restore equilibrium sounds quite easy too: reduce demand and increase supply. The central banks play a key role in curbing demand. For example, rises in interest rates make leasing vehicles more expensive, and at the same time, mortgage rates as before would get you less of a house. However, the effects are subject to a delay which can only be estimated in advance. Normally, the delay is at least of a year. Until the full impact of this is realized, central bankers must appear resolute in what they say. The head of the US Federal Reserve, Jerome Powell, in particular, has prepared the general public for a longer period of higher interest rates, and has also suggested that the US base rates could be well over 4.5% by the spring of next year. Many other central banks are taking the same approach. September was a month of interest rate rises around the world. In the short term, the supply of input goods, such as microchips, could increase again due to the gradual easing of the pressure on supply chains and transport capacity. This is helpful in terms of countering price pressures. Even energy prices in Europe have settled down slightly as a result of gas storages being filled earlier than expected, although historically speaking, they remain very high. Yet, there's a catch. Supply in the labour market isn't as easy to increase because a rather long-term course has to be charted. In the short term, the situation remains difficult. Researchers have estimated that in the USA, approximately 500,000 employees are still being kept from work due to the pandemic. The result of this is that it will only be possible to get a handle on wage dynamics once demand for workers has decreased. And that applies by and large too in the medium term. Equilibrium should primarily be restored through less demand. Investors will have to anticipate difficult economic conditions along the way, with recessions being quite likely in some countries. Patience is required. After all, it will be a marathon, not a sprint. However, there are a couple of encouraging signs. Expectations with regards to economic activity and base rates are now a lot more realistic, and the mood has somewhat improved. With some patience, these can be the opportunities of tomorrow.